If there's 10 other people that are willing to pay that price, then you're paying the market value.
Thing is, I don't have a crystal ball. I don't know what the next move is going to be. But if you're going to do any type of investing, I say 3 to 5 years is a legitimate time.
Yeah.
And, so with that in mind, I mean, there's a lot of fear of missing out right now.
Yeah.
The market is so hot here.
Yeah.
And, there's a lot of people, myself included, I had a 5-year plan. I
Yeah.
had not planned on shopping. Over the past 3-4 months, the topic has invariably come up with my wife and my clients. And I'm to the point where it's like, do I have to get in now before prices keep on going up? Do I wait a little bit for things to pull back?
Yep.
So I'm asking to look in your crystal ball.
Yeah.
What do you say?
Yeah. So first of all, I love the frame of comparing real estate to the stock market because there's really never been a better time to invest. So what is scary, however, to a lot of buyers, understandably, is that they're just looking at the sheer logistics of, I'm not going to be competitive unless I'm 10+% over. And there's no way to sugarcoat that. Like that is the truth. But that's a common misconception of, I'm paying over price. No, if there's 10 other people that are willing to pay that price, then you're paying the market value. Now, the silver lining here and what kind of helps my clients to, see the big picture is, yes, there's going to be a one-time upfront cost where they are going to have to pay a substantial sum to buy a home. Once you're in, if you look at the rate of appreciation, okay, and we'll get to what drives that in a second, but you're looking at the fact that as soon as you buy that house, you're making money on your money. So the national interest rate is 3% right now, sub 3% if you have above 750. And if you're making, for example, from 2000, in the last 12 months, the average house in Newburyport has appreciated by 13%. So if you just look at those numbers alone, you're looking at the average person made 10% on the sale price of their property. You really quickly get to the point where you're making money off the bank's money. And that's not an investment you can make in the stock market. It's not as capricious as the stock market. You're paying yourself to live. And ultimately, it's been a really strong blue chip investment. And I know that you had mentioned earlier about the big crash of 07, 08. And I alluded to it just now with, what drives appreciation. And really the answer is absorption rate. And absorption rate is, for those of you at home, it's just basically how quickly are houses sold, or how long does the inventory last. So if there's 10 houses on the market, how quickly are they lasting? And the answer is obviously not long. I know I'm not different than most realtors in this area. I have about 12 buyers for every one seller that we're working with within Blanchette Homes. So there's just more buyers than there is houses. And that's what's different between today and 2008. Because in 2008, we were driven by bad regulations. And I'm sorry to say it, but it was just people got loose and fast with lending cash. And it put people in a position where when the bank came to call, if you've seen The Big Short out there, it's going to explain 07, 08 very well. And I think that the difference now is we just don't have the houses. It's strictly pure supply and demand economics 101. And that's the biggest difference.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in the material are for general information only and are not intended to provide specific advice or recommendations for any individual. Mary Galach and Matthew Blanchette are not affiliated with Thrival Strategies or LPL Financial. Investing in real estate involves risk. Forecasts set forth in this material may not develop as predicted. There's no guarantee that strategies promoted will be successful.